It's been a real tough ride for the markets, and while there's a lot of concerns about a whole lot of things, think about this for a moment, right? There's nothing new in the last month. There's nothing new. All the concerns out there, except for one thing, a curveball thrown by Fed Chairman Jay Powell. His off-the-cuff remarks on October 3rd sparked what I'm calling the Powell plunge. Take a look at the 3 weeks of carnage since he said, well, I don't know, we may blow through the neutral rate. That's it. 3 weeks, carnage. Since then, Fed officials have actually circled the wagon. I think they need to make their intentions clear because Wall Street right now may be assuming the worst. PwC partner Mitch Roschelle, he joins us. Mike Murphy's back with us as well. So we knew about everything. We knew about tight labor markets. We knew the dollar was strong. We knew the tariff war started in March. The only thing that changed that we didn't know, October 3rd. The chart is amazing. We have gone straight down since then, Mitch.
Yeah, so this is about how much accommodation we're going to get going forward and how much of this growth in not only corporate earnings but in the market is based upon the accommodation that we got. You know, the money was just so cheap, no other alternative. All this money was rotating into equity.
I think it's part that, too, but I also think it's worry that the Fed may be working from an old playbook and that somehow they're going to trip this whole thing up and trigger a recession, and it wouldn't be the first time.
Right. Well, it was as if his statements were made in an effort to slow down the market or slow down the economy, which really isn't what they're looking to do. They want neutrality. That's fine. But at the same time, they need to raise rates based on the economic conditions. So I think one thing the market has loved here, Charles, is that they've been data dependent. So they said we'll raise when the data will support a raise. And to say that they have these plans going out forward when they don't have the data there, I think they need to walk that back a little bit.
The number two guy at the Fed spoke just about an hour and a half ago, Richard Clarida. He had a lot of different comments, more or less echoing Jay Powell, but I thought was interesting. He said there's still room for the unemployment rate to drop. He still sees the tax cuts as a tailwind for the economy. And he also expressed maybe being data dependent, but he also, Mitch, he seemed to be confident about what that data will be.
Well, what's interesting is the 2% inflation target. The question is how much of that is really based upon what's going on and how much of it is just expectations and us just business and the consumer just reverting to the mean and just staying at that 2% level. And maybe that's the wrong target. The question is, I mean, if you look at the last 40 years, we really haven't seen crazy inflation and the Fed's behavior is just revolving around that. They may be overshooting by just continuing.
It wouldn't be the first time, though, they've overshot.
It would not be the first time. It wouldn't also be the first time that a president was pretty vocal about the Fed overshooting. So, and I'm with Murph. The market's responding to that, no question about it. But the question really is going to be, is the 2% inflation target the right target?
And if you look at how the market reacted to his comments, I think the market actually welcomed his comments because there was maybe fear that would get more thoughts of more rate hikes, quicker rate hikes. But I think once everybody read through his comments, we were okay with it, and that's why we're here.
There was a little bit of pushback on Powell on a couple of things and a couple indicators that he thought were more important than Powell had. So maybe some independent thought there to push back against the Fed chairman. Before we wrap it up, then, how important is tomorrow's GDP number? I mean, is it one of these scenarios where we're rooting for good news to be bad news, or
is good bad, is bad good? For me, I want a strong economy. I want the economy to keep moving higher. There's nothing else I want to see. The economy weakening might cause the market to rally because, therefore, we're going to get fewer rate hikes. I don't want that. I want a strong economy.
Yeah, and I think in the second quarter, we saw a lot of trade getting pulled forward. In this quarter, that's going to reverse, but inventories are going to build. So I don't think trade's going to have that much of an impact on tomorrow's number. Still looking for something close to 4.